Bilingual investing, breaking investing barriers. Jay here with you guys today, bringing you a brand new, fresh off the press educational video topic. Today, become a successful investor when you stop, so on and so forth. So, we're going to get into the details. When you stop doing what? What do you need to stop doing, Jay? You got habits going on, you got certain behaviors, and things of that nature that we want to make sure we go through in this free educational video, for you guys, because we here at Bilingual Investing want you guys to become successful investors, and that's our goal. So we're gonna actually provide you the evidence, of things that you can do and that you can consistently work on for you to become a successful investor. So first of all, we're going to go through make your own investment decisions. So you have to stop letting other people either make or highly influence your own personal investment decisions. Number two, irrational emotional investment behavior. So number two, you have to stop just having irrational emotional behaviors when you invest. The market pumps, the market dumps, the volatility comes in, and then you don't know what to do. So you buy, you sell, and your emotions are all over the place. No. We want you to be, even keel, to know what you're actually doing, to be educated and to prepare beforehand. And then number three, patience is the key to investing successfully, guys. I say it so many times in all of my videos. At the end of the day, it's all about patience, and we're going to definitely go into that today. But before we do so, guys, don't forget, like this video if you enjoy this type of content. Also, don't forget to subscribe to our YouTube channel. If again you enjoy this type of educational content, make sure you subscribe, and then also click on the notification bell to stay tuned for fresh new educational videos such as this one. And if you enjoy this video, we have dozens of other free educational videos in the link in the description below, where it takes you to our free educational videos playlist. All right. So when I stopped making my own investment decisions based on other people's opinions was when I started to see true investment success. Under no circumstance should anyone else other than yourself ever invest your hard-earned money for you into any investment markets. Someone else may influence certain aspects of your investment decisions. Like, maybe you see the charts that Jay goes over, okay, maybe, based on what he says, I might consider, buying or selling and things of that nature, but not be like, well, Jay is saying that he's buying, so I'm a buy. Or Jay is saying that he's selling, so I'm a sell. No, like, you should never let anyone else, even people that you follow or look up to, affect or influence your investment decisions 100%. Because at the end of the day, again, you should not allow for them to essentially control 100% of your investment decision-making process. For good or for bad, it'll always be better for you to take responsibility of your own investment decisions. Better to live with results caused by you, yourself, rather than by someone else's decision. So, a perfect example of this is, let's say I'm applying TA. I'm doing a crypto climate video, and I'm going over the TA, and I'm like, guys, look at this. Bitcoin's at $16,893. This is a generational historical buying opportunity. I'm going all in. I bought me one full Bitcoin. This is it. This is the best price ever, and that's my opinion, right? And then you see my video and you're like, oh, okay, Jay's doing that, so I'm gonna go all in. And then in a couple of days or a week or two, Bitcoin decides to dump to, let's just say to the next support level at around like 13.7K, and then maybe investing up here wasn't really convenient for you based on your strategy or on your own TA. Technical analysis, abilities that you may have or deploy. So again, everyone's strategy is different. These videos are for educational purposes only. Obviously, I'm not a financial advisor. So what I'm trying to educate you guys is the same deal. What Jay is doing, anyone else, that's good for them. You need to do your own research. You need to invest and make your own investment decisions. Irrational emotional investment behaviors. I noticed that investment success started to happen more frequently when I stopped having irrational and emotional investment behaviors. Literally going all in and investing too much into the markets can cause any investor to feel high stress levels due to market volatility. This then, by effect, further causing lackluster investment decisions. This is a funny picture here. Making irrational, emotional, and revengeful trades will lead any investor to easily create losing investments. Emotions are a money burner, guys. A money burner. Okay, such feelings literally destroys your hard-earned money. As an investor, you must stop and control any emotional volatility. Look at that money, man. It's just falling down. The market's pumping, but your money's going down. Why? Because the volatility got to you. Emotional trades, revengeful trades. Don't burn your money that way. Emotions are a money burner. What does that mean? Okay, we were up here, we had the dump, so you sold down here. But then we pumped, so you bought back in. And now, you're waiting, thinking that the market might do this, and it just might, right? But what if it just keeps dumping down, right? And you bought up here. Then you're just burning your money, making play after play after play. Why, Jay? Because I missed this major move, right? The move is done for. It's already done. It's always better to wait until the market consolidates and move sideways, okay? So, that's just something to take note of. No need to be emotional or rational. Go in, go out of the market, and things of that nature. Let's say you're up here and you notice that we're dumping and we're currently here. Let's say you get out of the market, and things of that. Okay, then you wait. But if you go back in at the next pump, that's when things could get dangerous for you. So if you try and time the market, you most likely will get burned. So patience is the key to successful investing. Successful investments came for me when I decided to stop lacking patience, to start invest, more for the long term instead of short-term gains. No patience, no gains. For the most part, it's really that simple. The market works in cycles, bull or up cycles, and bear and down cycles. So what are you talking about, Jay? Let's go to the weekly chart. We're talking about cycles, right? Here we can obviously see we had a pump up to our previous all-time high. So essentially all of this, it's a cycle, a bear market, right? And then this is, a bull market. You could even throw this part in here, right? And then what we're currently going through, it's, a bear market, okay? Up markets, up cycles, bull markets go up. Bear markets go down. Simple, Jay. Even a 5-year-old can understand that, right? So, but it is highly important to understand the difference between cycles and to understand in which one we find ourselves in, because that definitely helps us with our investment decisions. It's tough for most investors to buy during bear markets, mainly because of fear. The trend of the market is down for an extended period of time, causing most investors to lack the patience required to survive and thrive until the next cycle starts. The downtrend tends to cause a lack of interest when really it usually represents the best buying opportunities. Right now with this candle, I won't lie, if you can see here all these lines, they're essentially support lines at this point, trying to convert it, into resistance. But they used to be support lines, strong support for Bitcoin. When you see it breaking like this, it's cause to worry, right? So what's going to happen to most investors? They're going to panic. They're going to be fearful, but maybe, just maybe, if you buy in this area, for example, you could be buying near the bottom just per se. No one knows, right? But talking about probabilities, where we're most likely closer to a low than to a high, obviously. So you would buy here, and then, people that take the risk here, because now everyone's panicking, and then the FTX contagion and the Black Swan event and things of that nature. People are panicking, fearful, a lot of uncertainty. Some people take the risk down here, and then they're the ones that are rewarded in the future when the cycle shifts and, the bull market comes, in the next couple of years. So for most, it's tough to sell in bull markets, mainly due to greed. Okay, the trend of the market is up for an extended period of time, causing most investors to lack the discipline required to take profits and become truly successful before the next cycle starts. The uptrend tends to cause overinterest when usually it represents the best selling opportunity. So the same thing here. We go to the previous bull market, up here, essentially in this area up here, this is the bull market. Greed comes in, but usually it represents the best time to sell. Okay, so human behavior is strong. That's why controlling your emotions, understanding where we're at in the market, truly helps your future investment decisions and deciding of what are the things that you need to stop doing to become a successful investor. Guys, if you enjoy this type of content, don't forget to check out our website. The link is in the description below. Our social networks. This content is not official financial advice, was created exclusively for educational purposes. So just in case, here's our website in the link description down below. Investment tools and resources for all of you guys. Check out our Twitter. Make sure you click the follow button. We would appreciate that as well. And again, subscribe if you haven't done so already. Click on the notification bell if you enjoy this type of educational content. Thank you so much for your time and attention. Have a good one.